Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario, where we are still looking for a move to the downside in a wave 2 or a wave B, before then continuation to the upside in a wave 3 or a wave C, where you want to see an impulsive structure to the upside with volume increasing. Now in this particular scenario, you can see that the support area around 28k compared to some previous videos has disappeared. Instead, one lower appeared on my chart, and that has all to do with this volume profile over here of the whole range that we have been in basically since the 14th of March, where previously the point of control of this range was over here around 28k, but now it moved towards the upside, so we lost a significant amount of support in this area. Besides, it also is in the middle of this gap over here, so there's not too much structural support. So instead what I did is I actually added a new support area over here after doing some analysis, where we have the value area low of this range around this level. We also have a monthly level over here, which is very interesting, and all of that is in confluence with the golden pocket that you take from the low to the high of wave 1 or wave A, put it on the golden pocket level, the 618 to the 66, and there you go, it's right in the middle of the blue target box for some very interesting support around this area, sitting between 26.8k and 27.4k, and that support area will be very important if the support area around 29k can be broken. Now in this particular scenario, looking more towards the lower time frames, it would be nice for price to look for another move towards the upside, either to this area around 30.5k or a little bit higher around 31.1k, to also bait people in potential long positions, grab the liquidity that we have over here, potentially fill this gap as well for then a move to the downside, as this corrective structure on the lower time frames for potentially a 5, 3 and continuation is very short in time. So it would be nice for price to move a little bit more to the upside, but we'll go into micro in a second. If we then go to the medium time frame bearish scenario, then we are looking for an impulsive structure to the downside, which is not going to be held by the support areas that I just mentioned. Instead, we go to deeper levels, taking the low of 24k over here towards the target area for wave C, where we are then looking for an expanding flat ABC to the downside, where the target area for C is between 23.4k and 22.1k. In this area, you can also see that we have some untouched support, which is the blue box over here between 21.8k and 22.6k. So that is actually very interesting indeed. Now what is not that nice about this scenario is, however, this wave 4 over here, because in a wave B we are looking for a 3-wave structure, as this is a 3-wave, 3-wave and a 5-wave move, and in a wave B we are then looking for an expanding flat ABC, where C is then a 5-wave structure. But this wave 4 is very long in time, 11 times longer than wave 2, 4 times longer than this wave 3, which is incredibly long and also incredibly unusual. So therefore this scenario has a currently lower probability. If we then go to the lower time frames, then I have two scenarios for you over here. This is the more bearish scenario, where we expect a move to the downside and we don't look back. We're not going to go back to the upside. We're not going to take the high over here at 30.4k, which by the way is a double top. We have high number 1, high number 2, but instead we are going to move towards the downside. In this scenario, we then have this as a wave 1 or a wave A, followed by 2 or B, which is finished, hitting the 0.382 Fibonacci taken from the high to the low of wave 1 or A, which is a rare target for a wave 2, but a common target for a wave B. Something to keep in mind in case price is moving to the downside. Basically, the probability is increasing. It's a wave C and not a wave 3. Now, in this scenario, we are then looking again for a potential wave 1, 2, and then continuation to the downside in a wave 3. What I, however, prefer to see in a double 1-2-1-2 scenario is that the second wave 1 is taking the low of the first wave 1. That is by far most common in Elliott Wave terms. So preferably what you want to see is a 1-2, 1-2, and then eventually a move down where the second one takes the low of the first one. But that didn't happen over here. We actually created a double bottom now, where this second low is higher than the first low. So therefore also the probabilities of this scenario, right, it's a little bit on the edge, it's less high, let's say, but in this scenario we are then looking for a wave 2. It could already be in, but based on the price action locally, I do expect actually another move to the upside. which would also be nice to fill the inefficiency slash the gap slash the fair value area, whatever you like to call it over here, because you can see there is not much structure over here. Price moved down in a straight line, but you do see a bit of an order block over here, which is that one green candle on your chart, gray candle on my chart over here, around 30.2k in confluence with the 786, which I think is a very interesting area, hence the reason why I do have a dotted line just in case if price is moving to the upside towards that 786 area, for then potentially a very interesting short position where, depending on what price is going to do in this area and your strategy, your plan, your entry requirements, a potential short over here can be interesting with the stop loss above this high. Then we would be looking for an impulsive structure to the downside, and as mentioned, price won't look back. Now in the other scenario, it does look back and we are actually going back towards the upside. So what I'm then looking for over here is a zigzag structure in a 5-3-5 wave move, and this scenario is on my chart mainly because this corrective structure is so short in time compared to this impulse to the downside. If we take a fib time, because waves don't only have a price relationship, they also have a time relationship. So with the fib time from the high to the low of A, you double click over here and then you put it on the 0.382, then you can see that this high has been made before the 0.382 fib time, meaning that the corrective structure over here is shorter than 38% of the time it took to develop wave A, which is incredibly short. Usually corrective structures take longer than the 0.382. So that is something to keep in mind, hence the reason I have this scenario on the chart, where if this is the first structure in a wave A, we could be looking for a 5-3-5 structure in then a wave B that I have over here. To finish wave B around the most common target area for a wave B, between the 1.236 and the 1.38, also right above the 29k support area for maybe a dip inside, and then moving towards the upside again, to then go towards the double top first of all, which I think is a very interesting target in general, either moving to the upside like this or in the shape that I have on the chart. Take the 30.4k double top, grab the liquidity, hit the resistance area over here, or if that's not enough, then fill this gap towards the upside to 31k, which I think would be very attractive indeed for also again a very interesting short area for then a bigger wave C or potentially a 3 to the downside, but in this scenario then looking for potentially a wave C to the downside. If we then go to the micro scenario, I actually like to keep it simple on the micro. Now on this micro scenario, price has been ranging for quite a long time, and I still expect, based on what I see locally, that we do get eventually another move towards the upside. Now if I open my target area, you can see I have a white box over here, which basically means this inefficiency over here is going to be filled. This is the order block sitting between 30.1k and 30.3k. So this is a very important area for price. If we get some proper resistance over here, maybe a bounce, bearish CVD divergences, could be interesting for a move to the downside. But in order to keep things simple, you can see I simply have a double top and a double bottom on my chart. Price is always attracted to double bottoms and double tops. It's like a magnet for price, for potentially a wick above, close below, move to the downside, do the same over here, wick below, close above, and then moving to the upside towards the white box. In this particular scenario, it's difficult to say if you can count this as a WXY or an ABC. Preferably, I think an ABC, which is a 5-3-5 structure. But also, based on the price action we get, I would actually like to see a move to the downside to the double bottom. Now, I don't mind this playing out, first taking the double top, then the double bottom, and then moving back up to that white target box area. That's all fine. But I think I would like to see this double top being taken before moving to the upside, because there's some interesting liquidity over here, as well as additional support. Now, the support areas on the chart, first of all, 29.8k to 29.9k. I mean, it's very, very small, as you can see, and then over here around the double bottom we have some additional support to the downside from 29.7 to 29.6, but mainly that double bottom is so interesting. We do, however, have bullish CVD divergences all over the shop, meaning there is upwards pressure. Market shorts are being absorbed by limit longs to push price towards the upside. We have a higher low over here in price, lower low on the CVD, target is this high. More locally over here, higher higher low on price, lower low on the CVD, and the target is then this high. So potentially grabbing this double top first before a move to the downside can be interesting, but then again, it is just a patience game. See which high is going to be taken first and then react, because I do think at both the double top and the double bottom, a very interesting scenario could be that swing failure pattern trade. Move below, close above, looking for upside, where then the entry is the close, stop loss below the low, looking for a move to the upside, which is basically the same as trading the range until it breaks, because basically these levels are showing us the range that we are in right now, and currently we are in the middle of the range. And for a range trader, this is a no entry zone, right? You want to enter at the high of the range for shorts or at the low of the range for potential longs, and now we're in the middle. So if you're a range trader, then of course no financial advice, but usually this is not the best place, and we need a bit more patience to see what price is going to do, which then also reflects the probabilities that I have for the different scenarios. So if we look at the probabilities, gotta find my box over here, there it is. And on the medium time frame, I'm looking for that bullish scenario, but I do like to see a bit more downside. So basically talking about this scenario over here, moving down, maybe feeling the inefficiency before moving to the upside. On the lower time frame, I think that we are still going to have another low to be made, either of course directly like this, or potentially in an ABC, or that is the alternative, but currently lower probabilities is moving up and then down, where again we are then going to make a new low. And on the micro scenario, if we then look at the probabilities, got to find my box somewhere again, there it is, then I expect, well, the double bottom or the double top to be taken, and as I write over here, wait for the reaction, and then hopefully, because that is all probabilities, we are then going to approach the white target area over here, which I think is an interesting area to observe the reaction and then wait and see. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.